Welcome back. Well, the markets have now moved to the low point of the day. I think I was expecting that to see a second down leg. So maybe, in fact, we drift a little bit lower as well. But as we've been mentioning from the morning itself, 17,750, 17,770. Those are the crucial support levels. For the time being, at least, the Nifty Bank is doing a relative outperformance. But let's move on then. Shobha posted a good set of numbers in the third quarter. The real estate major achieved its highest ever quarterly sales volumes as well as sales. In fact, realizations as well jumped up by close to 22% on a quarter-to-quarter basis. Mr. Jagdish Nangini joins us on the show. Hi, Mr. Jagdish. Thanks so much for joining in, sir. Give us a couple of details. 1,100 crores orders what you have achieved in the past quarter. How are things shaping up in quarter 4? And if you could give us a rough guidance for FY24?
Morning, Nigel. Yes, you're right. We have been very steady in terms of our sales volume for the past 8 quarters or so. In fact, last quarter, we did slightly better than that, which is about 1.47 million square feet. So and last year, we did about 4.9 million square feet. And this year, we aim to do at least 10% over it. And from a price improvement point of view, we have done about 7,900 rupees per square feet last year. And this year, we might touch about 8,900, about 13% or so increase. So both put together, we should be able to achieve about 24 to 26% increase in the overall sales value. This is mainly driven by a couple of things which are working in our favor. One is our geographical diversification, that we are present in 11 cities. That's a full cricket team that we have. And we've just added our 12th city, Hyderabad, with Shobha Waterfront in last month. So that geographical diversification has contributed to good steadiness and improvement. Case in point being this quarter, Q3, Gurgaon has done exceptionally well for us, doing about 500 crores in a quarter, highest ever. And that combined with the fact that we have been steadily launching new projects and bringing in new inventory from our existing projects, both have contributed well. And we seem, I think the steadiness will continue even in the next financial year.
Jagdish, hi, good morning. So wanted to talk a little more about Gurgaon, because now you have 24% of your volumes that come in from there, and that market has grown very well. You said 500 crore per quarter is what you did in Gurgaon, and the highest ever. Is that a quarterly run rate that you can maintain? What would your eventual target be, say, 1 year down the line? Also, in terms of new launches and market share, what are you looking at, particularly from Gurgaon?
The non-Bangalore locations like Gurgaon, they are typically, we have very few projects, 1 or 2 of them. And hence the expectation to do a similar volume every quarter might be tough. But overall, in the medium to long term, our goal is to improve our contribution from our other locations, specifically NCR. And I think we have decent inventory there. So we should be able to achieve a higher run rate of sales from Gurgaon as well.
So what are you looking at? I mean, in terms of an average run rate, what would it be like, X of Bangalore?
X of Bangalore, so this financial year, we have done about 30% of the sale X of Bangalore. And that, I think, we will slowly bring it down in the long term to about 55 to 60%.
Jagdish, just wanted to talk a bit more on the launch pipeline. You indicated that Shobha Waterfront was just launched in last month. So that will show up in Q4. That's the Hyderabad project. What's the overall size, and what about for FY24? Could you give us what's the launch pipeline, the overall number, and when will it come on stream?
Sure, yeah. The Hyderabad project is about 650,000 square feet in size. And the launch pipeline, so this financial year, we aim to launch about 4 million square feet, of which we have already done about 3.7 this financial year. And in the next 60 odd days, we should be able to do another 200,000 or so. So we will be able to do about 4 million this year. And next financial year, we aim to do better. Maybe hopefully we are aiming for about 5 million square feet in terms of new launches in line with our sales run rate.
Okay, 5 million.
Yeah. So got that. So FY23 launches will be 4 million square feet. FY24 will be 5 million square feet. You've also managed to pare down your debt. Your collections have been very strong. Plus, that's helping you bring down the debt. Can you give us a roadmap for debt reduction from here on? And if you have any capex plans, if you have plans to buy some land for further project development, could you tell us what is the thinking on that?
You're absolutely right. Our collections, particularly from real estate, have significantly improved. That's largely due to our steadiness in terms of our sales and our ability to make progress in the projects that we have launched. Last year, we did about 3,200 crores in collections solely from real estate, and this year we would be expected to improve it by about 1,000 crores. That's almost about 30% increase. That's really helped us, like you have observed, in reducing our debt. We have, in the last 9 quarters, we have reduced our debt by about 1,280 crores. And going forward, also, cash flow management is a focus area for us. But now we will start balancing it out with growth, wherein we will invest part of the incremental cash flow that we will have into new lands and our existing commitments.
Okay, all the best for that. Thanks a lot for joining in. Appreciate your comments. That's Sobha. Very optimistic there. They expect 5 million square feet of new launches in FY24. They've reduced their debt. And Gurugram as an area is doing very well for them. 500 crores per quarter is the run rate that they're clocking in there. It's the highest ever. By the way, look at the market. It's now under a bit of pressure. The Nifty is down about 80 odd points. The Sensex is down 250 points. And apart from the Adani Group stocks, in any case, which have a reason to be weak, it is a technology names, HCL Tech, that's Infosys, Tech Mahindra, that are all under pressure now. So that's one pocket that's sort of moved to the back foot right now.
For HCL Tech, in the MSCI indices, there is a weightage reduction. And that came in as a bit of a negative surprise. And there will be outflow. So analysts estimate the outflow could be to the tune of $110 million. So it was just that bit of a negative surprise. And plus, of course, NASDAQ was down 1%. So there is a rub-off impact across the rest of the IT bank.
Absolutely. Let's do one thing. Let's also move on and talk about the consumption space, because there's a slowdown as well. Sapphire Foods posted a sluggish Q3 earnings. Revenues have seen a 17% rise, but the QSR chain operators' margins have contracted on a year-on-year basis. Sanjay Purohit, who's the whole-time director and group CEO of Sapphire Foods, joins us on the show now. Sanjay, good morning and thanks for joining in. I wanted to ask you about what explains the weakness that you've seen in the business this time around. Is there is a general slowdown in consumption? There is this of course, there was a lot of pent-up demand post-COVID. Now, is that normalizing? And what do you see as the way forward? What kind of an average growth do you think you can do?
So we've seen actually a really good run for the last perhaps 4 to 6 quarters. So at some stage, it had to normalize a bit. Q3 last year was perhaps our best ever quarter. Even Q2 this year, we had a really strong quarter on both, on Pizza Hut especially. Post Diwali is when we have seen some sluggishness of demand and, therefore same-store sales growth coming down a bit. We had guided in the region of 5 to 7%. On KFC, we came in at about 3%, so below par, and Pizza Hut at -4%. I think this a little bit cyclical up and down is what we will always see in the Indian market. But the general trend on a long-term basis is always rising.
So this guidance, right, of 5 to 7% that you had given, you didn't meet that this time, but would you hold on to it for the full year, or would you want to scale it down, considering that Pizza Hut has seen sort of a degrowth? What do you think you'll end the year with in terms of same-store sales growth, and what's the outlook for FY24?
So I must stress here that this guidance is not a quarter guidance. This guidance is general guidance over perhaps 3 to 4 years. When people ask us, what do we expect our revenues to grow at? I say in the region of about 23-25%, where 5 to 7% will come from same-store sales growth, and the balance will come from new store expansion. So over the last year itself, we've seen nearly 30% new stores on both the brands. And therefore, this level of same-store sales growth is, if we are able to achieve, is good. This sluggishness that we have seen over the last 2 months does continue into the first quarter of this year, first of the calendar year. But again, I think these are good times. When you've got competitive times, I think trusted brands, big brands start to do well. If we double down on our marketing plans, on our customer service, on continuing to improve accessibility, on continuing to improve ease of operations for consumers, both dine-in, digital, I think this is actually a good time as far as I'm concerned.
Okay, all right. Hi, Sanjay. Good morning. So 20-25% is what you're guiding for, for the next few years, if I look at it on an average. And I believe that your EBITDA growth will be better, right? It should be higher than what your sales growth does. That would imply that margin should improve from here on. So on both the brands, if you could give us individually, what kind of a margin outlook do we have out there? And if you could give us for the consolidated entity as well, what are the margins we're looking at? Go ahead.
So this is on both, this is on the consolidated business, that revenue should grow in the region of 23-25% and EBITDA in the region of 30. Now, you might have a year when it is better than this, and you might have a year when it is slightly short of this. But this is the guidance over a 3-year period. And typically, as long as long-term trends keep improving, the short-term quarter-on-quarter numbers we should be less concerned about. The growth opportunities on both KFC and Pizza Hut, we believe, are similar, and that's why our store expansion on both the brands has been quite strong. And I think this is where we'd like to continue to focus on as we go forward, Nigel.
On the margins, Sanjay, that's where the street is quite optimistic that the margins will scale up from here. And going by the numbers, you're saying the operating profit growth will be better than the sales growth. So where do the margins head, consolidated basis, and break it up individually as well for both those two brands?
So margins should increase higher than sales growth over a 3-4 year perspective. I think what we have seen in the past 9 months, Nigel, has been quite something that we've not witnessed perhaps over the last 2 decades, where inflation has been double-digit in the mid to high teens, and that has resulted in us taking price increases also of a higher order than we have ever taken before. Now, when you're taking 8-9% price increase, but inflation is at perhaps 10-15, that's when you get margin.
Sanjay, as a consumer as well, it gets very difficult, right? Because the price increases are coming about. But, from the stock market perspective, they like to know both. I think on KFC, you were guiding closer to around 20% margins. And on Pizza Hut, you were talking about mid-teens. So do you stick to that?
Yes, undoubtedly. And again, I want to stress here, Nigel, quarter on quarter or perhaps a 6-month period should not affect the way that we see both the brands over a medium to long-term perspective. Over the long term, KFC at 20%, Pizza Hut today is early teens, should go up to mid-teens over a period of time.
On the top line, though, I just had one question, for a slightly medium term. You spoke about how there is demand sluggishness, some slowdown post-Diwali. You're also getting hit by a lot of competition. Popeyes, for example, they have their presence in Bangalore. That perhaps has impacted KFC's business. Is that something that you're looking to navigate as well? And if yes, how?
So undoubtedly, when, like I said, we've had 6 quarters of a really good run. And when things are going well, then many people jump into the fray. And so in good times, more people jump in. But the reverse happens when you get sluggishness. That is the time when big brands have the best opportunity to actually continue to do well. So from our focus is quite clear. We've got an innovation pipeline that addresses the brand loyalists as well as the entry value consumer. We're focusing on our customer service, dine-in, delivery, digital. We're focusing on improving accessibility. So I think these are tough times, a good time for big brands.
Okay, all right, Sanjay, very quickly, last time I quizzed you about Sri Lanka, you told me that it's moved out of the ICU into the ward bed. Is it going to be discharged from the hospital now? Are things on the mend in Sri Lanka?
So from an operating conditions perspective, Nigel, they're absolutely on the mend. We have very little disruptions. But then what is kicked in is the impact on consumer wallets. So you found inflation at about 90%. We've taken price increases cumulatively in the region of 50-60%. Taxes have increased. Therefore, consumer wallets have definitely got impacted. I think it will last for the next two to three quarters. And then towards the end of 23 and the beginning of 24, Sri Lanka as an economy should start to grow back. And then our strong presence, we are the #1 QSR brand there. All of that will start to kick in very strongly.
Sanjay, one-word answer. You said that demand was sluggish, continues to be sluggish. Was the January and the early part of February as weak as what we've seen post-Diwali? Or has it gotten better or worse?
Yes, similar.
Similar. Okay. And that would be, Similar.
One word.
Okay. All right. Thank you very much, Sanjay, for joining in. That's the word coming in from the whole-time director and CEO of Sapphire Foods India. Let's move on now. We've got another corporate conversation waiting by Sula Vineyards. The stock is surging. It's up close to about 6% Good set of Q3 earnings coming in. Record-breaking quarter, in fact, on the revenue, EBITDA and profit after tax. The revenue contribution from their own brands and the elite and premium segment has increased. Rajiv Samant, the MD and CEO of Sula Vineyards, is now with us on the show now. Rajiv, morning, and thanks so much for joining in. Could you break up this top-line growth of 14.5%? And congratulations in terms of the kind of volume growth that you had and in terms of the value add or the premiumization trend that we're seeing?
Yeah, so that's really been a theme for us. As you know, over the last 3 years, we have really focused on becoming a powerhouse in terms of creating our own brands and gaining widespread consumer acceptance for those. And within our own brands, premiumization has been a real key for us. And you're continuing to see that theme in Q3. And that's definitely our theme, current as well as future theme. So our premium wines, that is wines with a Maharashtra MRP of above 700 rupees, have grown much faster than the wines below 700 rupees. And that's what we've been talking about. That's what Sula is all about, creating strong homegrown wine brands, the best in each price category, the best in each kind of varietal. And then the premiumization, that's a constant theme.
What was the volume growth in Q3 or the number?
So the volume growth is about 8% less than the 8 to 10% less than the value growth. And the difference there is due to premiumization and price taking.
So in lakh cases, what would that number be, Rajiv?
The lakh cases is something we normally talk about at the end of the quarter, us being a very seasonal business. But I'd like to focus on the value growth there, 14% value growth in our most important quarter. What's important to note in the case of Sula and in the wine industry, it's a very seasonal business. Q3 is the most important quarter. And we are really pleased that our revenues have zoomed higher than 200 crores for the first time ever in a quarter. That's something that we're really proud about. Okay,
Rajiv, hi, good morning and congratulations. Wine tourism, this whole business is picking up in a big way. And every time I try to check at Beyond and the Source, prices are only getting higher by the day. So tell us a little bit about what the average room rate could look like. I understand that in the 9 months of this year, your average room rate has gone up to 10,500 rupees. You think it's going to go up higher than that? And what's your eventual plan with the wine tourism business? How much do you think you can grow it by? If you can share some numbers with us.
Well, I have some good news for you. We have added actually a number of rooms in this last quarter, and we're going to be adding more rooms in Q4. So we are very aware of the fact that people like yourself are finding it difficult to get a room. We want to address that. Yes, we've crossed 10,000 rupees in our average room rate, which is a fantastic average room rate. However, what I would really like is to make our wine tourism more and more welcoming for people across the country. Some really good news is that Indigo is starting flights now to Nasik Airport. SpiceJet has already started flights over the last couple of months. So we're going to be directly connected to around 6 cities in just around a month's time. 6 important cities across India. That's going to lead to a further boom in wine tourism. You know, numbers are picking way up. We're going to again be crossing 3 lakh visitors to our vineyards this year. But the good news is we're constantly adding more rooms and constantly adding more experiences. So I hope that you should be able to get a room. During the week is always cheaper than the weekend. So there's dynamic pricing, a lot of demand on weekends, always full. So you're always going to see high rates. But those of you who can take time off during the week, it's very rewarding.
I think you misheard my question. It was not about getting a room. It was about the room rate. The room rates.
So I answered your question again there. Room rates go down during the week and go up on the weekend.
Yeah, and Rajiv, you stole our idea. You know, we were wondering if if one of us bunks during the week, you know, for the cheaper rates, we're going to be caught on that part.
You know, do a corporate offsite and then stay an extra day. That's the best way to do it.
That's a great idea. I hope our bosses are listening.
Yeah,
you know,
let's have
corporate
a segment
offsite coming
from
up.
the vineyards. You know, wine is so exciting today. This is the most visited vineyard in Asia. Sula, our Sula campus at Nasik, is the most visited vineyard in Asia. What a beautiful place to do a CNBC broadcast.
And you know what? We actually have a lot to celebrate since we are #1 now in terms of budget consumption during the week and on budget day. So I guess, well, there could be a party coming. You never know. We can manifest all this. But, tell me a little bit about the numbers, right? Because for the wine tourism business, you've done, I think, in 9 months of this year, about 50-60 crores is the run rate, 54 or 55 crores. It's still a very small portion of the overall business, but what is the kind of scale up that you're looking at in terms of numbers?
Yeah, it's a small portion, meaning it's, it's probably around 10% of our overall business. But the importance of wine tourism cannot be underestimated. So what's happening there is, you will just see the numbers in terms of revenue. What I see is people coming there, of course, buying some of our most expensive wine, and that's what gives you the revenue and the profits, but then enjoying what they are seeing, enjoying this experience and leaving our campus as our brand ambassadors and as wine lovers and wine consumers for life. That's really what I'm betting on. So it really has an outsized effect in that case. And that's why those visitor numbers. Also, one more fact, this year, we are going to do about 120,000 tastings just at our Nasik campuses. So that's huge, in the context of things, when you think about how many wine drinkers there are in the country. And all of those people are going to learn a little bit more about wine, going to leave there much more confident about what they like and what they're going to order next time they're in a shop or in a restaurant. That's the importance of our wine tourism business.
You know, Rajiv, you had an impact on me the last time you explained to us the wine cult here in India, and, I've chipped in there, I think. So you're having quite an impact. But, your shareholders would like to know, what about the margins going ahead? What's the sustainable number? If you could give us a one-word answer.
Very sustainable. Whatever you've seen for the last 9 months is entirely sustainable. More than that. So last year, we finished off at somewhere between 25 and 26% EBITDA margin. This year, so far, we're on track for doing even better than that. But I want to caution about talking about too much more than that. What I would prefer to do is take, some profits more than that and reinvest in the market, reinvest in penetrating wine consumption to tier 2 cities and beyond. That's really got to be our job for the next decade.
Okay, all the best, Rajiv. Thanks a lot for joining in, and continue growing your brand the way you do. You make all of us proud. One of the strongest Indian brands to be out there globally. I mean, well recognized as well. All the best. Thanks a lot for joining in.
Thanks so much.
Okay, let's slip into a quick break on that note. The market is still under a bit of pressure, 80 points lower on the Nifty. But on the other side, Mitesh Thakkar will be with us for some technical tips. Stay tuned.
Bertram, meet Hector, the car that pampers me.
Pampers you, sir? Only a car.
Hello, MG. Good morning.
Good morning. What a beautiful day.
It's my favorite. Traffic jam assist. Ta-da!
Sir, please.
Relax. Hector's got this. Told you, it pampers me. The next-gen MG Hector. It's a human thing.
इतनी सी सैलरी में घर की ईएमआई कैसे भरूंगी? काश तुमने जाने से पहले टर्म लाइफ इंश्योरेंस लिया होता।
पॉलिसी बाजार पे 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 430 रुपए महीने से शुरू।
भैया वो फ्री वाला शुगर लेना यार। भैया जी फ्री का ही चाहिए तो आस्था ट्रेड पर डीमैट अकाउंट खोल लो ना। यहाँ पे इंट्राडे स्टॉक ट्रेडिंग बिल्कुल ब्रोकरेज फ्री है।
इंट्राडे स्टॉक ट्रेडिंग बिना किसी ब्रोकरेज के सिर्फ आस्था ट्रेड फ्लो ऐप पर।
Come what may, with Apollo Tires, have a wonderful day.
Suresh.
Yes, brother.
Please take care of it, huh?
Sure, I'll do it.
Really? You're concerned for it even if you're going to the village for just 2 days. But you never think about us this way.
Everything will be fine. My Rickshaw Union Group has taken LIC's Group Micro-Term Assurance Plan. Papa! Wow! Now no matter what, my family will keep moving forward.
Get LIC's Group Micro-Term Assurance Plan. Keep your family secure.
पढ़ता है, खेलता है, झूलता, उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
देखो 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 नया टीवी देखो। Ah, got the veggies from Chotu's shop? He gives the right rate.
Yes, Papa.
Decided. 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will, with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर, समझ कर, इन्वेस्ट कर, इन्वेस्ट कर।
Welcome back. PSU banks on fire. The Nifty PSU banking index is now up close to about 2%. State Bank of India, Bank of Baroda, across the board, buying interest is visible. Mitesh Thakkar is now with us on the show now. Mitesh, thoughts on the day so far, the morning, and the trades that you would recommend?
Oh,
you're on mute. Mitesh, can you hear me? Yeah, go ahead.
I got it. So basically, it's still ranging. I think we had a gap down, but the follow through is missing. So I think still contracting kind of a market. On the stock side, one is Aurobindo Pharma. It was a recommendation day before yesterday, and I think today we are seeing good follow through here. So buy this one with a stop below 450. I think it's looking like heading towards 480 odd levels. And the other one is you've already covered that. The PSU banking pack, State Bank of India is broken out on an intraday basis. So keep a stop at 546, look for targets of 575.
Okay, thanks a lot for that. Well, the market is actually staging a bit of a comeback, so don't lose sight of that. KPIT Tech is the stock of the moment in the broader markets. A fresh high on KPIT Tech this morning. It's already a 20% gain this year. That's the kind of comeback that many of these stocks are making. But let's get down to business in the commodity markets. Manisha Gupta is here to give us a roundup there. Manisha, what are you looking at?
Well, I'm looking at copper within the metal sector, Sonia, because this is one metal that has continued resilience, and we've seen gains continue onto this one. So in the international markets, we are trading very close to those 7-month highs. We did see copper prices decline all the way to 4-week lows, but the prices have come off from those kind of levels. Trading still on the lower side of the range, but there has been gains that we've seen in Shanghai and on LME as well. Well, you have to look at the US dollar index, and that's rebounded a bit, and that perhaps seems to be putting some pressure right now. But when you look at the fundamentals, the political and social unrest in Chile and Peru is something that the street will keep an eye on. And apart from that, it is also going to be about the Chinese demand. While there has been a lot of euphoria there, but whether there are confirmation demand numbers now coming in from China is something that the street is watching for. Apart from that, when you look at the inventories, those have seen a bit of a gain up, and that's the reason you have seen some pressure. So 61% of an increase, and this is happening exactly when you had the Lunar New Year holidays in China. So that means there was stockpiling in sense of inventories. The factories and manufacturing was shut, and that has led to higher inventories there. The global manufacturing activity has declined in the month of January. That also is keeping the prices in check. So whether it has been about US, China or Europe, we've seen the manufacturing numbers come in on the weaker side there. Again, as far as inventories are concerned, there are supply disruptions in Peru. This is where 2% of the global copper output comes in from, and the street will keep an eye on to that one as well. When you look at the copper, well, it's used in EV production. It is the green transition metal as well. So the markets do believe that in the second quarter, that is when the construction activity picks up as well, is when you will look at demand coming back into the markets. I also want to show you on what the prices have done in the meantime. In 2021, when you look at the Chinese demand, we've seen 1.5% of gains, and the markets do anticipate that for the current year, you're looking at 4.5% of gains. There is the reason you have the copper prices still trading in the positive for the month of Jan and 2023 as well. That picture should come in on your screens now, because for the last year, we saw the copper prices decline by 13%, which was the first annual drop since 2018. But in the month of Jan, we started with a bang. It was 12% of a gain. For the month of Feb, until now, there is some profit taking. So you have the copper prices down by 4.5%. But for the year, until now, we still are 8% on the higher side there. Another interesting number that I want to put on screen is that this is the data that LME released recently, and they said that Russian metals as of now make 42% of the total LME stock in Asia as on 31st of Jan. And here as well, when you look at copper, you have higher Russian metal there. 94% of copper on LME right now is Russian, 41% of aluminum is Russian, and 16% of nickel also is from Russia. So this is majorly in the Asian warehouses where we are looking at Russian metal coming in as a last resort. So this is something as well which the markets will take cues from.
Manisha, thank you very much for that. Now the mid-cap index is also back in the green. But let's get to our stocks on the move. Ekta joins in for Aurobindo Pharma and Lupin. Ekta.
Thanks for that. Well, yes, Aurobindo is in focus because they delivered what was a better set of numbers as compared to what the street was anticipating. Revenue was up 6.7%. Margins improved all the way to around 15-odd%. Street was anticipating around 16-odd%. But there is a Q-on-Q improvement which has taken place in terms of margins. And the profit did miss expectations. But nonetheless, the US revenue was quite strong. So $366 million is where it came in at versus $350 million. Remember, in Q2, it had hit a multi-quarter low of $331 million. So there was some amount of an improvement which took place in the US business. Now, the board is going to be transferring its API non-antibiotic division to Auro Pharma, and the slump sale is around 3,300 odd crores. Separately, the company did hold a call, and a couple of important takeaways is that the article of association is modified in order to factor in buyback provisions. There is pricing pressure which has improved. There was pricing pressure in logistics, freight, which has now improved. Injectable revenue was at over $70 million in the quarter. They are aiming for injectable revenue in double digit on a Q-on-Q basis in FY24, and no regulatory issues in their formulation facilities. So these are a couple of important takeaways from the Auro call. Lupin. Margins were at a 5-quarter high. US sales were at a 3-quarter high. India was still sluggish, but nonetheless, these were two important parameters the street was watching out for. Revenue was up 4%, margins at 12.3 versus estimates of around 12.2%, and profit of around 153 odd crores. Margins on a Q-on-Q improved to 12.3 versus 10.9%. US sales $177 million. Street was anticipating $165 million. So that too is better. But the company did indicate they are facing price pressure in the US. They will be focusing on margins of around 18 to 20 odd% eventually. So these are important takeaways, important key points that whether or not margins will improve on a sustainable basis. Overall, largely in-line set of numbers in terms of the margins as well as US business for Lupin. Macquarie has an outperform. They've said that the US revenue was below estimates. They were anticipating $190 million. Maybe that's where the disappointment is emerging from.
Okay, thanks a lot, Ekta, for that. So that's on Lupin, biggest loser in trade this morning. Let's slip into a quick break. On the other side, Lata will connect with Suresh Ganpati of Macquarie. Remember, Macquarie has, after a long time of being negative on Paytm, has now come out with a double upgrade on Paytm, post which the stock saw a massive up move. Stay tuned for more.
Bali, here I come. Beda, check the weather in Bali. Passport? Where is my passport?
Today 23 degrees, tomorrow 24.
Not today or tomorrow, after 3 months. Khanna uncle is taking all of us to Bali. He has got some solid investment tip. Doubles the money in 3 months.
Let me guess. He's received some kind of hot SMS tip, right?
Correct. How did you know?
I receive such SMSs all the time.
Acha?
If these SMSs were reliable, we'd be on a world tour every 6 months, na? Papa, relying on anonymous SMS tip? Be prepared to take a dip.
So this won't be used at all?
Oh.
सोच कर, समझ कर, invest कर.
टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ.
Low emission premium plus by Century ProWood. Invest once and enjoy guaranteed maturity with life cover with LIC's Dhan Varsha, a single premium plan for your family's security and prosperity.
अपने घर और कमर्शियल स्पेसेस को बनाइए अल्ट्रा मॉडर्न, इनोवेटिव, इको फ्रेंडली विद क्विक इंस्टॉलेशन. ऑल दिस एट द वन स्टॉप डेस्टिनेशन. यूरो प्रतीक.
आप जानते हैं 15 सेकंड का ऐड कितना लंबा होता है? काफी बोरिंग है, इसलिए डायरेक्ट बता देता हूँ. आस्था ट्रेड पर ऑप्शंस में 5,000 रुपए का ब्रोकरेज फ्री. तो बनाइए फ्लो ऐप पर अपना डीमैट अकाउंट.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
When you live up to expectations, then winning people's trust is possible. And trust results in Bandhan, like Bandhan Bank, India's fastest growing bank. Bandhan Bank, आपका भला, सबकी भलाई.
लड़की होने का मतलब ये नहीं कि बंदिशों से दोस्ती कर लो. कामयाबी हौसला देखती है, जेंडर नहीं. इसलिए लाइफ तुम्हारी, रूल्स भी तुम्हारे.
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है. इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू.
पापा ने अपने स्टार्टअप ड्रीम को रीस्टार्ट किया ताकि मैं ये सीख सकूं, सपना है तो पूरा करके दिखाओ.
करो पूरे अपने इरादे, अपनों से किए सभी वादे. SBI लाइफ, अपने लिए, अपनों के लिए.
Welcome back. One stock that has caught the attention of investors has been Paytm since it announced its numbers. And one particular research house, Macquarie's, has given it a double upgrade. Macquarie has upgraded it straight away from underperform to outperform. It hasn't gone through the normal equal weight. It has also raised the target price almost double from 450 rupees to 800 rupees after it saw the Q3 numbers. And the note on February 8th said that the biggest surprise has come from the company's distribution business, control of cashbacks and, of course, control of operating expenditure as well. But to understand the company better and how Macquarie has understood the company, Suresh Ganpati, the banking analyst at Macquarie Capital, the author of the report, is with us. Suresh, good morning and thank you very much indeed for joining us. Can you exactly explain what impressed you? They earned more from distributing financial products?
Yeah, so if you were to really look at it, when we had a forecast about near before or one and a half years before when we initiated on the date of listing, we did believe that the core business maybe not be making much amount of profitability, and whatever profits have to come will come from the third-party distribution of loan products. But we really didn't anticipate the scale at which they could do it. So therefore, what has actually happened is we have actually increased the numbers by 200%. So they are actually 3 times the level at which we had earlier anticipated. And also, Lata, what has happened here is there is a thought process behind this upgrade. So just for the benefit of audience out here, we have checked with some of the largest partners about the quality of the portfolio which is being originated by Paytm, and actually stands rock solid. And that gave us the belief that yes, maybe there is some merit to the third-party distribution of loan products that they are doing, and therefore it definitely warrants an upgrade considering the risk-reward, where the valuations are and where the earnings projections are likely to be going forward.
Okay. You know, you've given us a lot of bar charts in terms of the number of loan transactions done, the number of loans disbursed, the value of loans disbursed. You have given us a lot of bar charts in your book. But what impressed me most is this merchant loans category. You know, their penetration of BNPL, you know, buy now, pay later loans is 4% of their total transactions or total customer base. But merchant loans is 5.2%. Is that very impressive? Because, you know, those would be slightly larger value loans, I would assume.
Yeah, so there is a big scope here, and they are taking 5% as a percentage of various devices, POS devices, which they have installed. So it's not the entire merchant base. It's only calculated based on the number of devices installed. And these ticket sizes are closer to about 1.5 lakh kind of a ticket size. So as and when they actually pick up this segment, even this segment can contribute more to the loan distribution revenues. And of course, the take rates are around 4%. So yes, it can continue to drive the profitability as long as the lender is fine with the credit quality outcomes that they're seeing on the book, because Paytm is not taking any balance sheet risk, right? So the lender has to be eventually comfortable with these kind of loans that Paytm is originating for them.
Okay. Are you sure that the loans that Paytm brings, more like a business correspondent to the bank, are safe? I mean, is this risk that the bank may face losses and stop connection with Paytm, is that risk all that palpable?
I mean, look, Lata, that is precisely what we highlighted in the front page of a report as the major risk. So Paytm doesn't carry any balance sheet risk or solvency risk, but Paytm carries a significant amount of business and reputation risk, and therefore it's like basically they're riding a tiger or they're running on a treadmill, right? So they have to keep delivering these stupendous numbers for their partners, quarter after quarter, month after month, and they cannot afford to have a blip. I mean, that's the challenge here, right, Lata? If you have your own balance sheet, you can afford a couple of quarters blip and resurrect yourself and come back. But if you're dependent on your partner's balance sheet, the partner is not going to give you a long leash of line. So to that extent, there is always going to be a significant business risk associated. As of now, considering the kind of penetration levels that we are seeing into the overall target customer base of Paytm, I think for the foreseeable future, the current trends could continue. That's the call that we have taken, and therefore eventually we'll end up upgrading the stock to an outperform.
Okay. No, I'll tell you why I'm concentrating on the merchant loans. This is something an insider explained, not insider from the company, somebody from the fintech industry explained to me, but I was not very sure what he's saying is right. What he was saying is that Paytm has a very good record of transactions for a merchant. You know, how many people pay through Paytm. As well, they are able, I don't know if this is correct, they're able to escrow some of the payments that come through their payment mechanism, and so the chances of default are less. Is that the way to understand it?
Possibly, yes, on the merchant side. But remember, right now, if you look at it, 80% of the loans are personal loans, consumer loans, right? So, and that's where we have to be a bit more careful, because that's the one which is actually grown at a pretty furious pace. And that's where I think the risk could also be, in case, obviously, they are not able to adhere to the loss rates that the partner institutions would want.
Would you rely on their AI a lot? Since they have seen a lot of payments, maybe they choose their customers better or not so?
I mean, look, Lata, I mean, every fintech is saying we use AI, ML and stuff. So many fintechs have gone bankrupt in India, right? So, I mean,
right,
across the world.
That.
So it's not, I mean, just using an AI, ML and use those fancy language is not really going to help you. I mean, let's, to give credit where it is due, of course, they have a large ecosystem and they have a large network, both on the consumer as well as on the merchant front. And therefore, they have, of course, slightly at a higher competitive advantage compared to many of the other fintechs who grapple with scale, size issue. And one important point here, which I would like to differentiate between Paytm and others in terms of their strategy here, is a lot of fintechs in India, Lata, went into tenured loans, like a 3-month, 6-month, 9-month, 12-month loan on the balance sheet of theirs using FLDG structures. And clearly that went bankrupt. Paytm goes through the buy now, pay later loan. It's a shorter duration loans. You just test, guys paying, then slowly graduate him into a personal loan category, right? So that's the approach. And because they have a wide network, they are able to do that. Others obviously went into a particular 6-month, 12-month higher ticket size loans, and they clearly didn't have the underwriting capability and eventually had to face huge losses.
So they have a better trick on personal loans, and it's possible that their merchant loans also is going to bring more business for them. Okay, the other thing I wanted to ask is their contribution margin. Now, for those who don't use this jargon, contribution margin is the selling price of a unit minus the variable cost per unit. You know, all the investments made divided by the transactions, that is the cost per transaction. If you minus it from the selling price, that's the contribution margin. Contribution margin has gone, has improved very well for Paytm. Is that sustainable, and why could they do that?
No, I'll be very honest, Lata. I mean, the way I look at it, and I'm a bit more traditional, I will never go by some of these techniques to look at it because they don't include a lot of expenses. Employee expenses obviously is never a part of contribution margin. At the end of the day, I need to see them delivering accounting profits. It's as simple as that, right? So currently the upgrade is also a function of the fact that at the time of initiation, we thought they won't make profits for the foreseeable future. As of now, in our model, they will make accounting profits as of FY26. And that's what is more important rather than looking at contribution margin. I'm going to look at the overall expenses and then see whether you're going to make accounting profits or not. So let's go by the traditional EPS measure rather than this convoluted adjusted EBITDA and adjusted DPS measures or adjusted contribution margin measures.
No, you also said that they have
accounting profit.
Yeah. No, you have said that they have controlled costs. So that's why I asked you that question. Just a final question, because that's the most relevant one. Today, there has been a block deal. Now, we still don't know whether it was any of the promoters or, private equity guys who sold it. We don't know anything. We only know that there has been a big block deal, and that has brought the share down about 6%. Is this an overhang?
Definitely. I mean, let's put it this way that Ant Financial, I don't know whether they are sellers today. I have no idea, but I'm just telling that Ant Financial and Alibaba, even after Alibaba actually having sold stake at the start of the year, hold together 28%. So that the Chinese control entities are controlling more than 25%. So that remains a significant overhang. SoftBank owns 12% or 12 or 13% after a 3% stake sale in post the IPO lock-in expiring. That's another 12-13%. So this will definitely remain an overhang to the extent of 40-41%. Some of these guys who are obviously been a part of Paytm for a very long period of time, I mean, they can very well come down. And specifically the Chinese companies, I mean, you know what is the thought process here of the government. There is definitely the selling pressure and overhang which can happen on Paytm. And that's a risk which every investor should be mindful of.
All right. We're out of time, but that was an interesting chat. Suresh Ganapathy, thank you very much for joining us. There are a lot of people who were carried away by the Paytm story, and then there came the big disappointment. But now there is hope that they will get to profit in a few years, maybe 3 years, according to Macquarie. But yes, there are several caveats, and there is the overhang of the promoter investors, the original investors booking profit. We have to get into a break. But before that, there are some visuals coming from the UP Global Investors Summit. Prime Minister Modi is accompanied by the Uttar Pradesh Chief Minister Yogi Adityanath. Union Defence Minister Rajnath Singh is also accompanying him. Those visuals will come up for you in just a bit. It's the Master of Ceremonies who is holding fort at this point in time. But you will see, and there is a large gallery of Indian India Inc. So those were the live visuals that you're getting. You will get more of that through the day, but right now those are the live visuals of people in the auditorium and who will be taking the dais very soon. A very big event lined up with almost everyone in India Inc. present there. Okay, well, we will have to go into a break, but Chartbusters will take the action forward. As you can see, the creme de la creme of India Inc. is present over there, along with, of course, the Prime Minister and the Chief Minister.
हम सबका परम सौभाग्य है कि जब माननीय प्रधानमंत्री जी के यशस्वी नेतृत्व में